Now in his Closing Bell exclusive, Denny CEO John Miller. John, very good to see you. Thanks for joining us.
Thank you for having me today. Appreciate being on.
So I guess we mentioned just there, like declining to give guidance, but in the very short term, are you seeing things pick up significantly as reopening increases?
Yes, things are dramatically improving, but because it's early in the improvement, it's a little early to guide for the balance of the year. But you'll remember that a quarter of our portfolio is in California and out west, where there have been more restrictions. The lifts have been slow in coming, but to keep the public safe. And in the process of getting there, we're just now opening up dining rooms across the country. I'm pleased to say, though, that as of the end of April, we have 99% of our brand has some dining room capacity at the present moment. So by all means, things are improving dramatically day by day.
And so top line sounds like it will continue to improve dramatically, as you say. What about costs, whether it's on the labor side or the food price inflation side?
Food inflation, typically runs in that 1 to 3 range. There's normally the ability to price around that and keep things modest so that consumers sort of marching in step with their own pay and earnings increases. Wage inflation is going to be a little bit more of a headwind for the industry with a very, very tight labor market. It's a high-class problem for America. We like to see, wages go up, middle America being rebuilt as we speak, and we'd like to think that we're one of those places that's sort of very proud to contribute to that with a lot of living wage positions throughout our food servers and cooks throughout our ranks. That said, we have a lot of training to do to get back to full capacity. We only have a third of our brand now open 24 hours. We're typically 24 hours across the country. And so as we train and staff during daytime positions to sort of staff the late night, there's some cost associated with that, a little higher starting wage than what we've had historically.
I was going to ask. Oh, sorry to cut you off. I was going to ask about the overnight shifts because there's a report that franchisees of 7-Elevens were asking the company to not require them to stay open 24 hours because they couldn't find people to work that shift. Is that what you're dealing with?
We all have to be in this together, and our franchisees, run 96% of our system. So by all means, we have to face that current reality. We think it's a temporary setback. We are working with our franchise community and some third-party vendors to do some additional branding and advertising to attract some of the top quality talent across the United States. In June, we expect to have a national hiring day, and we're seeking to hire 20,000 additional employees from where we are today. We do think that by middle summer to late summer, this will start to improve, and by the end of the year, it'll be fully mitigated. But for right now, we are not requiring our franchisees to move faster than their ability to staff properly.
What have you done about safety, John? Are you requiring people get vaccinated or test? And what are you seeing as people come back indoors for dining around those safety concerns?
Yeah, no, we see that there's a mixed bag. There's people that are not concerned at all, never really were. There's always going to be that crowd. And on the other end, there's people that are very concerned. They're maybe caregivers. They're looking after their family, their kids, or older folks in the household. And so they're quite concerned and a little bit more reluctant about going back out to eat. So we're building our whole brand reputation around these 4 pillars right now. One of those is reassurance that our cleanliness protocols are in place, that our employees are in good shape and wearing masks. And then we've gone to great lengths to protect the dining public as well as our staff and vendors. And right behind that is this value message. We want to make sure that's defined a little differently. We're a little less focused on the absolute price value right now and a little bit more focused on making sure people get the quality and experience and convenience they're looking for. So, value and then comfort, the home away from home feel, that welcome when you come into your local neighborhood diners, and then finally convenience. With dining rooms opening up, April came within 2% of 2019 sales, so the quarter was down 20. So you can see how this is dramatically improving as each week goes by. But our Denny's on demand and the convenience through our virtual relationship with our consumers has stayed very, very sticky. And those sales, which doubled during the pandemic, continue to be really, really high in spite of inside dining opening up.
Shepard Smith here. Thanks for watching CNBC on YouTube.